We're back with some news on the housing front. We'll go to Washington. Diana Olick has that for us. Hey, Di.
Hey, Scott. Yeah, this is from the FHFA director, Bill Pulte. He's the conservator of Fannie Mae and Freddie Mac. He just posted on X, after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. Interesting, in the note, he then has a release from the FHFA, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock market and bond markets. Cryptocurrency has not typically been considered in the mortgage risk assessment process for the mortgage from mortgage loans delivered to the enterprises without converting that cryptocurrency into dollars. So he is now, this is not happening immediately, but he is directing Fannie Mae and Freddie Mac to prepare proposals for consideration of crypto as an asset for reserves in their respective single-family mortgage loan risk assessments. So that means that your crypto can back your mortgages. Now, this is an interesting play because there is actually a startup company called Milo, which already does this, and it's been slowly moving into the mortgage market in that way. Some people buy and sell in crypto on their own. But for Fannie and Freddie to use crypto as a backstop for their mortgages, that's going to be interesting going forward, as we know how volatile crypto can be.
Yeah, man, that's crazy. 40 days, God, I've been Swayze. Grew the beard out, that ain't shady. That's a bird, man, I ain't baby. Talking hope out, that's so crazy. How I got a shot, raise the bean sprout up, put a crown up on her head so the boys seeing, no, that's a lady. If you ain't catch a double that time on the last rhyme, dog, I could help you. I got plenty more where that came from. When I brainstorm, I need shelter. It's enough water.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partners, Dale and Cliff, back in the saddle again for another edition of Real Estate Friday Live. Cliff, how you doing, big time? How was the week, big dog?
Man, doing good, man. You know, a couple little ups and downs, but man, finished the week great. Man, we're getting ready to finish off this month, bro. And that's I gotta admit, man, doing good. Had a good month. Going to the next one. So man, it's going good, man. How's your business going?
It's going well, man. It's going well. Of course, you have your ups and downs. Anything in business, if you're not having up and downs in business, you're not doing business at all, period. But
true.
you have your ups and downs, man, which is great, man. Some challenges here and there, man. Dealing with vendors that are special. I'm gonna keep it peachy. Special, which is fine. Cliff, I already know what I'm talking about. It is what it is.
Got you.
So, sometimes, guys, you deal with banks and lenders and loan servicing companies that actually services the loans. Man, when I tell you, man, they trash. They trash. Cliff, is what, a month, man? A month and a half.
Something like that, man. I mean, back and forth, just spending all this time and all this effort and everything, man. Just it's crazy how much time. Watch out. You gotta always, everybody who's out there paying on your mortguage.
Yes.
Make sure you checking on your payment processor from time to time, because they mess things up and you're paying a little bit more than you should.
Yeah. All guys, please heat us on that one, guys. Please heat us on that. Make sure that you're verifying whether it's your personal residence or your investment properties, that the loan servicing company is accurately applying your payments. Because if you don't, all of a sudden you can get a notice saying, talking about, hey, you ain't seen no payment, but you've been paying for like the last 2 or 3 years. I was keeping it 1,000 with you guys. But real quick, if you could, guys, like, subscribe, and share on the channel, guys. Man, if you like what we're talking about, click on that bell right there at the top of the screen, guys. So whenever me and Cliff come live, you get to keep kicking with us, guys. But we're going to revisit a topic that we used to talk about in the past, Cliff. Man, it's called the current market analysis. Man, people have been missing. Excuse me. This segment of the show. So Cliff, as a licensed appraiser that does business in Texas, but you can also go outside of Texas, what are you seeing currently when it comes to the market in real estate? Talk to us.
No, first off, y'all know I look better than that picture down there, man. Don't look
No.
at it. Y'all see me right now. I look better than that. Y'all gotta point that out.
Hey man, hey
You know, I'm
man.
pointing that out every time, man.
I have it changed next time. My bad, my
It's all good. I gotta update. I gotta send you something. But,
bad.
but man, the more what's happening. Let me tell you what's going on in DFW.
Okay.
Prices are falling.
Yes.
I'm starting to notice that there's weakness in the market. There's not as many
Mm.
buyers. Interest rate remains high.
Mhm.
We're seeing still not many houses on the market, but the people who have to sell
Yeah.
are selling. They're dropping prices. I mean, I'm seeing, probably around 5% drop when I
Mhm.
do see drops.
Mhm.
There's still a decent amount of buyers out there, but I think most people, for their home, they think that their home's worth a lot more than it is,
Yeah.
especially as the buyer pool weakens.
Mm.
And it's happening
Mm.
month over month. So what's happening is we didn't see a big change, right? There
Yeah.
wasn't a big month over month, year over year, but it's been like 0.2%, 0.3%,
Correct.
but month over month.
Correct.
So now when I look back when I do my analysis, I'm seeing that weakness of almost 0.7%, but
Yeah.
over the past 18 months or so. So we're coming at close to 6% drops whenever I see the amount of where the prices where they actually hit the market, roughly
Yeah.
around 6%.
Yeah.
I think that they're aligning with the mortgages and
Mm.
what people can afford.
I agree. I'm saying the same thing, whether it be luxury, what I called a mid-level, and then of course a lower. I'm seeing prices come down cliff. I mean, there is a place here in Collin County to where the houses are not overly priced, but they've been on the market for a long period of time. People are not buying them because the rates are too high. Guys, a 680 credit score and above, the rate's going to be 6.75%. That's on a pristine file. And excuse me, most lenders right now, I know if you go through a traditional bank, like a Bank of America, Wells Fargo, depending on if you go into the branch at all, they're not offering any type of buy downs. They're not. I mean, it doesn't make any sense for them at all. Or they'll say we can't really compete with what you can get from from the consumer. So I was counseled to, hey man, either go new construction and go through their mortgage bank, and ask for those concessions, or when you're talking to a consumer, yeah, you can use the buy down, but really negotiate a little bit more on seller concessions, man. You agree or disagree?
Yeah, I think you always have to. So you got to kind of look at it from this perspective. I'm gonna give you some insight into like what appraising is like. When you see concessions, that
Mhm.
doesn't necessarily you see a strong drop.
Correct.
Every home is different.
Correct.
But when you do look at the market and you see overall concessions,
Mhm.
that's when you start to see, okay, why are most homes delivering a concession? It doesn't mean someone wants it, but they're negotiating. And the fact that they can negotiate that price
Yeah.
down shows that there's weakness because
Mhm.
you and I both know when you flip a property, if you don't have to take a concession, you ain't taking one.
Yes, sir.
You say, I got other buyers. But when you don't have a large buyer pool, and I've seen some, it's not crazy. It's not every property, but it's not wild for me to see a $15,000 concession
Yes.
or 20,000. That's not
Yes.
crazy. I see it
Yes.
every once in a while. People are getting into the house, seeing a
Mhm.
couple bumps and bruises,
Mhm.
going for gold. Saying,
Yeah.
I want 20 racks off, and the seller is going, it's been on the market for 5 months.
Yeah.
I haven't had offers. I take that 20K hit just to get it off the market.
Yeah.
So, if you're bidding right now, bid strong. Market's weak. It's a buyer's market.
It is, guys. Like you actually have some sellers also lying about the number of bedrooms and square footage. Just be lying. Just be lying. Just be lying. It's 6 bedroom. There's only 5. But no, this room appears a bedroom. First of all, there's no door. Second of all, there is no closet. So where is the bedroom? Like where is it? Am I going to put my clothes on the wall? Like where do my clothes go? That's what's literally going on, guys. People are lying about what their specs are on the property, which is kind of odd.
Yeah. And I want to put a caveat here because I hear this all the time. So I'm gonna give you a little bit more wisdom here.
Mhm.
Whenever you're looking, he brought up the point of Dale brought up the point of bedroom count
Yeah.
and things like that. Bedroom count does not necessarily add more value
Ooh.
If it's a 4-bedroom, 5-bedroom, that does not necessarily mean it's like, well, my neighbor has a 4 and I have a 5. That doesn't show more value. A lot of people think so. It does not. The second thing I'll say is the price per square foot. I get this from realtors all the time. What's it? My house price per square foot is $300. Another house price per square foot is $325. Mine should be high. As an appraiser, we do not take that price per square foot as the value.
Come on.
That is not how we view the market. So if you think your price per square foot is different than your neighbor's, that's fine. It could be greatly different. We're looking at other features. Like, what if your neighbor has a covered porch? What if they have a pool? What if they have new upgrades inside their home? What if there's many other things to look at that you could have a vastly different price per square foot. So that's not the gold standard at all. So I'm just giving you a little bit of advice. Yeah.
Again, guys, you're getting from a licensed appraisal. Okay. This is not somebody pulling out the behinds. This is someone that actually actively appraises apartment complexes and single-family residences. Okay. This is somebody that can do that. Okay. Actively. This is boots on the ground. Okay. No theory, facts here. And what I do as an investor, whether I'm funding someone's deal or I'm buying something for myself, because right now I'm and Cliff are looking at apartment complex in Detroit, Michigan. We're looking at that. And so now we're looking at those numbers. We take into account the exact same thing that we tell you guys. We apply the exact same method. Am I right, Cliff?
Exactly. Yeah. Yeah. And so, but yeah, I mean, it's wild out there. That's why you got to go and you got to consult with people who've been through the process before, because you can get, I see it all the time. People get upset or they get annoyed or frustrated because they don't understand the process or what people are going through or thinking. And I'm going to tell you this. I don't care who it is. You always think yours is the best. You think yours is the best. And unfortunately, that's why you have to get a third party to come take a look. They can go, it's good, but it's not the best.
Come on. Preach that thing, guys. But man, guys, today's topics, y'all. Hey, this right here, guys. Hey, the Trump administration, they greenlight crypto as a mortgage asset when you're applying for a mortgage. What you say, Chuck? Number 2, because of this move, will the Fed lower interest rates? Number 3, how will this move help the market? And number 4, man, there's some reports talking about a housing warning. Is deflation ahead? We're going to talk about all that, man. So Cliff, man, let's dive into the first one real quickly, man. The Trump administration greenlights crypto as a mortgage asset that you can actually use when applying for a mortgage, whether it be for single-family residence or if you're buying an investment, man. I'm gonna bring in some legal eagles here for real fast, Cliff, man. And the report on CNBC, they're one that actually made the announcement on this, guys. And I see what they're talking about on this, because this here really, hold on, what happened? There we go. This here surprised me tremendously when this actually happened. I knew this was coming, but Cliff, this came for real. Let's dive into this. Here we go.
Welcome back to Squawk on the Street. Bitcoin on pace for a positive week, holding above $100,000 a coin. And the Trump administration taking another step to integrate crypto into traditional finance. We're talking housing. FHFA had Bill Pulte posting on X, quote, after significantly studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. We're going to talk more about what that means next hour with Bill Pulte himself, and also about his recent harsh criticism of Chair Powell. But it does raise some questions. And again, he's just asking for proposals. So one of the questions is, crypto is very volatile, unlike stocks and bonds. So does that make it more risky for Fannie and Freddie to take them on, companies that we know are really systemically important for the U.S. housing market?
But if you're thinking about somebody's net worth or trying to understand their credit worthiness, it makes sense that you'd count all of their potential assets at least.
Unless you have a 20% slide in 2 days in crypto.
Yeah, you can always apply some sort of a discount.
And then you have to package the mortgages to sell them, right? And if if you have crypto as part of that, how exactly would that work?
Typically you're looking at a person's ability to pay on a monthly basis, so you should be looking at their income stream as opposed to their assets anyway, right?
You would think,
yes,
theoretically.
That's what they do.
And I do wonder just how big of a deal this is. Does this increase the availability of mortgages? Does it do anything? Does it change the equation at all? Yeah. Those are questions. Yeah.
So Cliff, man, real quickly, man, what are your thought process, man, behind this here when it comes to cryptocurrency being added or being counted as a mortgage asset when you're applying for investment or a homestead property?
Yeah, man, that's an interesting thing to look at. I mean, you got crypto, right?
No, I don't.
Oh, you holding the cash. I got a little bit of crypto.
Yeah.
Nah, I mean, I think they're gonna treat it kind of like stock, where they just discount it.
Mm-hmm.
Like she said, maybe probably 50%. So like if you got 100K in crypto, they'll probably just call it 50K in assets. So they'll discount it for asset value. But my bigger question is this. This is a good question. How do you prove ownership of the crypto?
Oh,
like who's to say that I can't just wire, hey Dale, here's 50 racks in Bitcoin. He's like, yep, I got it.
Well,
proves he has it, and then he can wire it back.
That's the same as a gift for down payment, right?
It would be kind of as a gift, but I guess what I'm trying to say is whenever it's a bank statement, it shows that as a line item, you can't hide it from a bank. It's a transaction on the bank records that they could say, hey, you received a wire but when there's no transaction items, if I just have a wallet, if someone said, oh, I want to use my wallet for mortgage, they're going to say, okay, well, let's show the Bitcoin. They can show you the Bitcoin, but how do they know it's your wallet? It's just.
Well, here's what I think the play is, Cliff. The play is for, remember, when you and I talked about this months ago, we talked about how Trump had that cryptocurrency summit. Mm-hmm. He made the comment that he wanted to be the crypto capital of the world because in all cryptocurrency, 95% are done with the US dollar. Because he saw China trying to make a move in the cryptocurrency at the end of Biden administration before the election. And so he made this move ready to go. So when he got into office, boom, he could do this. And there's a reason why he chose Secretary Bessent and Secretary of Commerce. Those two individuals are cryptocurrency godfathers. That's what they are, right? So here is what he wants. He wants to be able to leverage the cryptocurrency. This is the first portion of leveraging it because right now, in the past, as you know this, you told me this, cryptocurrency has always been at odds with the federal government because it's decentralized. Mm-hmm. Now they're shaking hands with it, right? They've created two reserves on the cryptocurrency side at the government side, Bitcoin and cryptocurrency, and they seized $500 million, $500 billion, I believe, worth of cryptocurrency from, I think, a Russian oligarch. They seized it. They didn't sell it. What they did was they actually took it and put it into reserves. Right. And the whole thing was for them to position the banks to be able to make their own coins, right? With the full faith backing of the federal government. Because they want individuals and banks to lend off of the Bitcoin or the cryptocurrency because they want you to leverage it via debt. Their whole goal is to expand the money supply without expanding the money supply via printing additional money. That's their whole goal. Therefore, in their mind, that is a digital way of creating a new currency, so to speak, without causing inflation. Now, there's a issue there because now you're looking at a digital dollar, which you already have, but now that goes into more of the modern monetary theory, which is that can control inflation. That's kind of the pros and cons of what's going on. Initially, I like the move because it could probably get the market going a little bit, but until the Fed chairman does something else, I don't see any doing anything at all.
Yeah, I mean, the crypto is smart. I mean, it's a good play. I think it's going to be here for a while. Mm-hmm. I don't think its use case hasn't been discovered yet. I think they're still where is it really going to get implemented the most? And
Sure.
because right now, Bitcoin is really just a hedge. It's a hedge against the economy. It's a hedge against like you said, the fiat currency. Where it's smart strategically is to position the United States government along with Bitcoin to accept it in commerce with it, because one, it's not going away. It is a form of payment. And two, it creates a stronghold against the rest of the world, because their currencies now have to go against Bitcoin, and every single one of their residents access to Bitcoin in a way they wouldn't have access to an American bank. So now if you were transacting in, I don't even know, the franc or the mark or even Argentina, think about that. Do they think they want to hold the Argentina currency? No. So when they get their Argentina dollar, they immediately can put it in their bank, buy Bitcoin, and now they actually own an asset because their currency is being deflated at crazy levels, 10% a year.
Crazy levels.
But if they own Bitcoin, instead of losing 10% a year, they're gaining 20% a year.
There you go.
And so it establishes dominance in the currency space for the United States. And it really hurts the rest of the world.
Yeah, it really hurts. And their chief competitor on the world stage is China.
Yeah.
China's been wounded for real here.
And they don't like Bitcoin because if they allow Bitcoin in China, they immediately going to go buy it because now the government has no control over the currency.
Exactly. And this is the reason why Trump did what he did. Now we got a question real fast, Cliff. This is from Kick. It says Sean said, what is a mortgage asset?
Okay.
Well, I'll give my answer to give you your answer. A mortgage asset is an asset, something that pays you whether you work or not. That's what the true definition of asset is, right? So therefore, your home is not an asset. Stop playing. Stop lying to people. All right. Number two, a mortgage asset, something that generates an income or has a value that you can actually place onto your balance sheet and say, okay, Mr. Banker, I am safe to give this loan to because I have this asset. So when it comes to Bitcoin or cryptocurrency, well, this is a big deal in my opinion, is someone like a Cliff, myself, or you could say, hey, Mr. Banker, I own $100,000 worth of Bitcoin, which is great for the bank because if you need to monetize it, you can. You can leverage the Bitcoin if you need to. So therefore, that gives the bank more security to give you a mortgage, if that makes sense.
Right, exactly. Yeah. And a mortgage asset is, you can look at, if the way that they were talking about it, you can have an asset like Bitcoin, which just is basically equity cash.
Yeah.
Something that cash flows, or a mortgage in itself that to the owner of the mortgage, they're getting that mortgage payment. They're taking that in as income. And that mortgage is an asset to them. And I do want to say this in terms of sticking with the Bitcoin, Dale, you know what I heard this week is part of the bill
Talk to me.
that they're trying to implement with the Bitcoin. So like you said, the banks are trying to get involved in this.
Yes.
They actually lobbied against the bill to say crypto like Tether or Coinbase. They have their own USD, right?
Correct.
It's a USD in their own way, but it's basically the dollar.
Sure.
They lobbied to say, hey, these third-party institutions, Tether, Coinbase, they can't provide a return. They can only store it. So if you buy a dollar, you hold a dollar, no value increase, because they want to monopolize the ability to say, hey, put your money with us so we can provide a return.
Yes. That's the reason why Secretary, I forgot his last name, but Secretary of Commerce, that's the reason why he wanted to flow Bitcoin or cryptocurrency through the banks. Because then the banks can add that to their balance sheet, and banks can not only lend out for fractional reserve lending on fiat currency, right? They can also do the exact same thing through Bitcoin or cryptocurrency, and it forces them to compete to provide better products to consumers like you and I. Brilliant move.
Yeah.
Brilliant move for them.
And it's smart. I think Bitcoin is going to continue to rise and be the global currency. It's going to be, I still think it's the dollar, but Bitcoin's going to become number two. The bigger it gets, the more stable it becomes.
Correct.
Right. And then you can now that once you own Bitcoin, you start understanding wallets. you'll be able to transfer that Bitcoin over to USD. So
Mhm.
now you have the average person around the world can say, wait a second. Because think about it right now. If you're in Egypt, you're in Libya,
Mhm.
Singapore. If you want the US dollar, how do you do it? You have your money in the bank.
Sure.
You got to go to this whole now you can go buy Bitcoin, turn it into USD,
Yes.
and now you own the dollar.
And it's via loan.
And the United States is going to become even stronger and
Yes.
be more embedded into the system because we have that translation between Bitcoin. Because all you need is a wallet. It's free. It's amazing, bro. It's crazy what's going on.
Clip, we made to have you do a whole class on the Real Estate Friday on Bitcoin, a crypto, a whole teaching on what's a blockchain, how does it work, how is it more efficient than what we currently have, what's the pros and cons and stuff like that. I might have you do that, man. That'd be good. That'd be cool, man. Now, excuse me, we have a lender that went on CNBC, and he talked about how he fuses loans with Bitcoin.
Okay.
Yo.
Okay.
Here we go, y'all. Let's dive into this real quickly, man. His name is Andrew Holmes. He's with New Market Capital. Look him
Continue crypto conversation. Price of Bitcoin this morning got very close to 100,000. Join us now, Andrew Holmes, New Market Capital founder and CEO. And today, New Market is announcing Battery Finance. It's a Bitcoin-focused asset management platform that combines cryptocurrency and other assets. I won't say real assets because that sounds funny, doesn't it? It's like, something other than Bitcoin, like a real asset. I'm not
tangible. How about
tangible? Let's call it tangible. And the first, you've got to explain this to us. The first time you're combining Bitcoin to actually make maybe loans, which, why don't you explain it? Because it takes some of the problem that you normally have with lending, which is inflation, I guess, and it could actually lessen the risk and volatility for fiduciaries running pension plans.
Yeah.
Hard to believe Bitcoin could be a solution to pension fund management.
That's what we're thinking. Well, good morning, Joe, Becky, Andrew. I'm so pleased to be here. And I'm really excited to announce today on Squawk Box this loan that we've just completed. We combined a seasoned multifamily asset in Philadelphia, about 50 meters away from the First Bank of the United States, the one that Alexander Hamilton started. We combined that asset with around 20 Bitcoin. And we provided a loan to refinance the existing mortgage on the property, to provide the asset sponsor some funding for capital improvements, and with the remainder to buy the 20 Bitcoin.
Okay, we got to go backwards.
Go ahead.
You got to go backwards. We're just going to slow the whole thing down so
Nice.
everybody understands what happened. Okay. So there's a property.
Yep.
Physical property.
Multifamily.
Right, it's a multifamily.
63 units.
It's a multifamily property. The sponsor, effectively the owner of that property, needs a loan.
That's right.
Okay. They come to you.
That's right.
Okay. You say, we'll provide you the loan in the form of
a loan.
A classic loan.
That's right.
Okay. So you're going to give them cash.
That's right. Term financing.
Term financing. And how long's the loan? Just
10 years.
10-year loan. Okay.
That's right.
At above market rate or below, or what's
No, market rate interest rate.
I'm just trying to slow the whole thing. Okay, now let's introduce the Bitcoin piece into it.
That's right.
So, no. Explain how the Bitcoin piece then relates. So the loan has been provided.
The use of proceeds is to pay off the existing financing. So
the use of the proceeds
of the loan is to retire the existing mortgage.
Right. So there's an old mortgage.
Gone.
They're going to pay the old mortgage off.
That's been paid off.
Okay.
Now they have a little bit extra money to make some improvements in the property.
Right. So a little bit extra cash. So the amount of money you've lent pays off the old loan.
That's right.
It's also you have a little bit of extra to fix
Improve
stuff up.
the property, fix stuff up.
Yep.
And then with the remainder, which is a little bit
So you
more.
have even a little extra, an extra turn.
And that, instead of cash out, it's Bitcoin in. And we use it to purchase some Bitcoin and add it to the collateral package of the loan. So now our loan is supported by both the traditional asset, the 63-unit apartment building, and the Bitcoin.
Okay. So the loan, it was maybe $2 million more, so that's how you get the Bitcoin out?
Exactly right. So it's
on the assumption that the Bitcoin's going to rise faster, and that will become an asset.
Over the life of the loan, for sure. So we think on the downside, this provides us with much better protection compared to a traditional lender, because a traditional lender, if something goes wrong, they have to recover against that particular building, which is idiosyncratic risk. Something might happen with the maintenance or what have you.
But that also requires conviction on your end that Bitcoin is not a volatile asset over time, and that is either going to go up or at least stay where it is.
Well, that's by fusing the Bitcoin with credit and by fusing it with traditionally financeable assets, it gives us the luxury of expressing that medium-term view on Bitcoin. And that's what's key. It's volatile in the short run. You know, I mean, minute by minute today, who knows? It could cross 100,000. That would be exciting.
How long's the loan?
10 years.
10 years.
And the minimum hold period for the Bitcoin is 4 years. So what we say to the borrower is we say, look, you can repay the loan at any time for any reason with no penalty, which is a really valuable feature compared to a traditional loan.
Yeah, that's like a home mortgage.
Like a home mortgage almost. That's very unusual for commercial financing. But what we do say is that to the extent that the loan is repaid at year 4 or earlier, the minimum will release the property. But the minimum length of time that the Bitcoin has to stay in escrow is 4 years.
Andrew, go on, because I don't know how it's sounding.
So Cliff, man, that's a lot of information, bro. Hey, bro,
Right.
Go ahead and cook, big dog. What's going on?
I mean, I think they're packaging something traditional and something untraditional.
Yep.
Because, whenever you do a house, all right, we're going to break it down. So whenever you get a house, they want to see what kind of assets you have in order to be able to afford the property. And if you're doing a rehab, you can fix it up and all that kind of stuff.
Sure.
Now, if the house has enough equity in it, sometimes they'll let you use the equity, or if you have enough equity, they'll let you use some of the cash proceeds to be a part of the loan to say you qualify.
Yep.
Because you're getting cash back.
Sure.
All they're doing is taking that cash that you would get and saying, instead, we're going to give you crypto. And we're going to put that into
escrow.
Into escrow. It's almost slightly worse because
I disagree, but go ahead.
Because let's say we're doing $1 million apartment complex, right?
Sure.
We got a good deal on the deal. We got for $400K, at least about 100, 200 worth of work, right?
Sure.
They refi us at 70%. Cool. So $300K comes to us, $200K for the rehab, $100K on top because that's just, because we got extra equity.
Sure.
What he's saying is that $100K would have to go into crypto and be held for 4 years. But if we did it traditionally, I would just get the cash.
Well, actually,
and I can buy crypto if I want to.
Well, I think he said something different.
Okay, maybe I'm missing something.
What I think he's saying is by fusing crypto with a traditional asset like real estate or a loan itself, that from the lender standpoint gives them more security, because they are they're looking at both of this as a long-term view. The apartment complex, long-term, multi-family unit, long-term. And they're saying with them marrying or partnering the crypto with the apartment complex, they're essentially saying that, hey, we kind of double insulating ourselves, so to speak, because yes, from the short term, crypto can go up and down, but we believe in long term it's going to have a long term effect. So much so we're willing to partner this with the real estate. Now, in the refinance example you're talking about, I'll use an example. Let's say if it's just 200,000 goes for the rehab, 100,000 for cash. Well, not all the 100,000 is going to Bitcoin. Only a portion of it is, with no prepayment penalty. And it's a 10-year loan. So yes, theoretically you're correct. If you get 100,000, you can probably buy the crypto yourself. Cool. But at the exact same time, you wouldn't get as friendly a terms as they are getting. The enticement are the terms for the loan, because the terms for the loan is to increase the value of the real estate. Right.
Okay. Well, okay. So I see what you're saying, but if the terms are different, for example, we use the example of 70%.
Sure.
Now, if that came to, I'm gonna give you a situation, Dale. All right, let's see. We're gonna put Dale up against it. You ready?
I'll admit.
All right, we're gonna see what you got. All right, here's the deal. Property's worth $1 million.
Okay.
You got the deal for $400K. Cool.
Okay.
$200K rehab.
Okay.
That leaves you, they're gonna give you 70%. So you got $100K cash.
Gotcha.
Okay, cool. So that's traditional. Now, if they said, all right, we're gonna push it from 70% to 80%.
Okay.
On that cash out.
Sure.
But the rehab still has to be $200K, so you still had $600.
Sure.
That remaining $200K has to go to Bitcoin. You can't pocket it. It goes to Bitcoin. And it has to be held for 4 years.
Mm-hmm.
Are you going to take that deal? Now the loan is still 80%, but
sure.
$200K, but you're getting more money of it, but it's just going to Bitcoin that has to be held 4 years.
I would say
that deal, or do you take the traditional 70%?
I would do the traditional 70% because of the fact that all of the benefit is on the lender's side, but I'm the one taking the risk of the loan. So I would say no to that deal. Now, if we split it down the middle, or 30% of that goes toward Bitcoin, we can talk. But I'm not going to take all the risk, guys, at all, and you get all the upside. That's called a bad deal.
Right. Because what could happen is if there is a failure, not only do you get to pay the 80%,
correct,
but the Bitcoin, the cash you got, that could drop 20%.
Sure.
So now you got hit twice. That's what I'm saying, that this is not the bank's not taking any more risk. It's the person who's taking on additional risk by being forced to hold Bitcoin for 4 years instead of just getting cash.
But that really depends on the structure of the deal. From what I heard him say, not all of the cash, because he talked about it in the breakdown. He said there is some cash going to the borrower. So the borrower is happy with the cash that they're receiving, and the borrower is getting the cash that they actually need to pay off the previous loan and have the money they need to renovate the property. So if I'm thinking, if I get cash back at the refi and I have to earmark some of my cash toward Bitcoin, okay, that's fine. I can do that all day long. That's great. I'll do that deal all day long because of the fact that I got such favorable terms itself. Now, at the end of the 4 years, if if you want me to take this deal, I want to maintain ownership of the Bitcoin because of the fact that, hey, if I'm having to earmark some of the cash, that's really my Bitcoin, not yours. Does that make sense?
Exactly. But no, I hear what you're saying, but what better terms is he getting? I'm not hearing better terms, like in terms of, he said the interest rate is the same, the loan to value is the same. He's just saying part of the cash back that you get has to be Bitcoin. I'm going,
it could be speed, it could be it could be draws, it could be, do I get a draw up front? It could be how they package the deal. He didn't go into the detail of it because I don't believe these guys could even understand what he's talking about at all. But it could be structure of the deal. It could be.
Yeah. Again, if he packaged the Bitcoin together with, again, maybe a higher LTV, okay, they package it together with, like you said, favorable terms like, hey, we're going to pay you out quicker because it's in the Bitcoin. Just some other terms, and yes, but from what I can tell, it seems traditional. It seems he's just, instead of getting cash, they said, hey, okay, we'll send the Bitcoin, we'll buy Bitcoin at closing and send it to escrow. Now, what this tells me is this may be how it's going forward. I think the bank's going to keep their lending terms, but where I'm seeing the money is, and the shovel, if this is how they're doing it, who's that escrow company and who are they buying the Bitcoin from? And I bet you it's Coinbase.
Yep. Yes, sir, Doc.
They're regulated and they have the insurance.
They're going to own some portion of the title and some portion of the coin. There's going to be some double dipping somewhere. They ain't stupid. What that looks like, I don't know. I have no clue. All I know is that they're not dumb. They're not dumb. I'm looking it up now to see on the website on Newport Capital. Is it Newport or New Market? It is New Market Capital. I'm on the website now to see our firm. Let's see, headquartered in in the U.S. Securities and Exchange Commission. Okay, investment advisor. Okay, is this the company? Yep, this Andrew Holmes. Is this him? This him? Yeah. Okay. They got a brother second second in command. I see, bro. Well, he's a senior marketing managing director. So he's second in command. Okay. Wait a minute. I see Aaron Barnes. My man's in them. So okay. Here, guys. Oh, this is what we're seeing real fast on Newport Cap. I'm gonna get rid of this real quick. Here we go. Let me change it. So what I'm trying to show guys is this company is real. This is not a fly by night company. No, this company is real. It's right here. It's real. It's right here. So we're trying to find some information about what he was talking about, resources. But if you're on CNBC, guys, talking about this, it's real. There ain't no BS. Here's their team again. Here it is. Here's the same guy who's on there. Aaron Holmes, Andrew Holmes. That's his name. That's him, right there. That's him. That's him. That's the squad. That squad. The one thing that he did not do is he didn't go into details about the structure of the loan. He probably could not because of Patriot Act laws, which is fine. But I would just say I like where he's going with it because of the fact that, to me, Bitcoin, as you said, it's going to be an asset because it has to be that way, because the government is going to have to find creative ways to create currency without inflating. You have to.
Man, I'm wondering because I'm looking at the opportunity here, right? I mean, you could own the asset, but there's no added value in owning it. I'm wondering, what the really opportunity is while Trump is in and he's crypto friendly, there's an opportunity to build the easiest, simplest, straightforward business and take it institutional. What I'm talking about is crypto farming. And I'm talking about actually getting physical devices that for crypto transactions. I mean, it's nothing. All you need is a computer science guy on your team, right? Somebody who understands the rack space, and you literally go out to warehouses, load them up, connect them to a computer, and you can watch the transactions. I bet you they're making 8% a year return. On easy owning, and that's on the returns, not even if you own the asset. If you put in place, hey, we're gonna actually mine Bitcoin, and then we're required to hold each Bitcoin for 18 months. That gives you even higher return because you're compounding on the transaction profits you're making. Man, that seems smart. Anybody out there, man, holla at me if you think you can do that.
Here is a little bit about what they're offering, Cliff, real fast. Let me make it bigger for everybody real fast. I'm sorry to make it bigger. There we go. This is the battery financing situation. This then we go to the top. It says right here, this is on Bitcoin magazine. It says new market capital. Get rid of this garbage, man. Got the way. New market capital launches battery finance Bitcoin collateralized loan strategy, which is what he was talking about on CNBC. Let's go down to the bottom real fast, guys. It says this here. It says, let's go. It says how battery financing strategy works. Battery financing enables Bitcoin to use a 10% to 30% of the collateral for loans alongside traditional assets. To bring this new strategy to life, New Market Capital partnered with 1031 to establish Battery Finance, a majority-owned subsidiary of New Market Capital that utilizes Bitcoin in financing structures. Unlike other lending companies that let clients borrow against Bitcoin with a risk of liquidation in the event of Bitcoin's price drops below a certain threshold, New Market Capital removes the risk and offers loan structures without a mark-to-market trigger. As lenders, we are constructive on long-term value of Bitcoin and comfortable recognizing Bitcoin as a collateral without mark-to-market risk. says Holmes. It says, we achieve this by incorporating Bitcoin as a component of a broader collateral package alongside the traditional financiable asset. In this way, we have improved our downside through the introduction of Bitcoin and uncorrelated element, an asset that has had such a strong history and appreciated time on the dinner. It says deals that employ strategy structured differently. In some cases, the borrower can use Bitcoin they're already holding as collateral for a loan. So it seems like New Market is bringing their own Bitcoin into play.
Wow. I think there's a huge opportunity here as we start to see the growth and adoption of Bitcoin. I mean, where's it at today? It's at 107 today.
Wow.
107,000. And you know, they're going to do the halving here. So I think there's huge ROI. Man, reach out to me. The more I'm realizing the opportunity here is, I'm going to tell y'all what it is. This is the business opportunity that I see, Dale.
What's up?
What you should do is raise some capital, and it's a very straightforward business plan.
Sure.
Raise some capital, as much money as you can get. I don't know, have a $5 million goal. And what you're going to do is you're going to go buy racks and computer equipment because you're buying it at $5 million, you'll be able to get economies of scale to be able to buy it cheap. Because you're going to walk into the builder and say, right, whoever builds these, you know, for example, AMD, right? Those computer chips, if me and you buy it, it's a $300 chip. Correct. But if we spend $5 million, correct, that chip can come down to maybe $350.
Correct.
Right?
Correct.
But we spend $5 million at that. I mean, you're looking at 15% returns year over year. Yeah. And all you're doing is buying equipment. The key to so let me let y'all know out there again. This is what I do a little bit. So
yeah, that's what he does.
In Bitcoin, where do you think the costs are? So for example, if I send you $1, Dale, it's gonna cost some money.
Sure.
Right? They call that a gas fee. Who gets that gas fee? The miners. Yeah. Every transaction, there has to be an underlying, like the SWIFT system of banking, there has to be an underlying system that gets the fees.
Sure.
Well, that gas fee, the miners, the main cost of that is electricity.
Because of the money. Yeah, that makes sense.
Right. Because it costs so much money to do the blockchain for that transaction, it takes a lot of energy. So when they talk about the value of the blockchain, they're talking about it in terms of energy.
Correct.
Call that, right. If you actually get $5 million, you solve multiple issues. You buy at scale, you buy cheaply, and you buy your energy through solar panels other energy efficient systems where you go, we bought our solar panels. This thing is self-sustained. We don't have to pay for electricity. So it's a one-time setup. And it runs forever off solar. And now you make money at a consistent rate for forever, as long as those machines can run.
Correct.
Man, we need to look into that. Anybody, if y'all know about this, if y'all have this understanding, hit us up. We might be able to put something together here. I'm going to put something together because, like I said, Dale, once you build it, you're done. There's nothing else to do. It's self-sustaining.
Yeah.
And if you buy enough land around it, you also have solar that you would put on that as well, to where you could tap over to your power supply and sell the rest of the grid. That's a genius.
Now, let's spot on, Cliff. Now, look at this, Cliff. This is you wanted to see the breakdown of the deal. The breakdown of the deal. Let's walk through the breakdown of this deal real fast, y'all. All right, I'm gonna break that real fast. It says, all right, deals that employ this strategy can be structured differently. In some cases, right, a borrower can use Bitcoin they've already holding as collateral for a loan, while in other cases, Newmark Capital and the borrower purchase Bitcoin as part of the loan structure. The latter is how the loan for the Bank Street Court building was structured. Here's how it was structured. It's a $16.5 million building, and we offered the building owner a $12.5 million loan. Right? Said The use of proceeds was to pay off existing financing, which was $9 million, to provide them with approximately $2 million in CapEx for certain improvements to the property they wanted to make, he added. With the remaining $1.5 million, we purchased just shy of 20 Bitcoin as part of our combined collateral package. At the time, right, the Bitcoin had already appreciated 30% in value since it was purchased.
Wow. So 30%, he already made $500,000.
Correct.
Whew.
That's why they did that. The borrower got what they wanted, cash, to make improvements. There's no 1.5 there, and they use the 1.5 for what? To buy Bitcoin. And they got the terms they got the terms what they wanted, which is great. Unlike traditional loans, which often lock borrowers in with a prepayment penalties or a make whole, the Bank Street court financing can be paid off at any time with no penalty. To allow for this outcome, the borrower of the lender aligned to share appreciation on the upside for the Bitcoin over the life of the loan. So they share in the upside of the Bitcoin.
Okay.
And the borrower, because why? The 1.5 million, right, which the lender gave them the loan, which was profit tax free to the lender, to the borrower. What do they do? Simple. They now both jointly own the Bitcoin. They share the upside. Now remember, he got $200,000 for improvements. So as you know, with improvements, what, you make it newer. You then charge higher rents, which then generates a higher valuation for the building. Then you refinance with a traditional loan, and you're done.
Wow, makes sense, huh? But it's still, but I still see that loan, that the way he put it, that 1.5 million that was put into Bitcoin, that would have been cash otherwise, though.
It would have been cash, but by buying the Bitcoin, they netted $250,000 a piece.
Right.
At the acquisition. The acquisition. So to me, I'm like, that makes sense. If I know that I can get the renovations done in 12 months, right? $2 million, knowing that I could probably increase it another, if you're charging a 6% cap rate, depending on the area, 3, 4, 5 million, Cliff. And you refi at the end, and you get your true payoff then on the upside also of the Bitcoin. Player. That is a deal and a half, man.
Yeah, I mean, there's definitely opportunity, man. You got my mind racing all the opportunities because it's so straightforward. I just ran the numbers in real quick as we're looking at this deal, and I'm packaging it together. I'm looking at 10 years, 115% internal rate of return.
Wow.
Which is roughly, you're looking at about 12% per year, and that's not counting the inflation of the asset, meaning every time that's the transaction. So you get a piece of Bitcoin, it goes into you keep that. That's if you just did profits. But 12% on owning a miner, plus if you hold the asset and the asset goes up 30%, you're looking at what, 300% internal rates of return?
Jeez, guys. If you don't know what IRR or total rate of return is, look it up.
Oh, my bad. I'm just throwing that out there. Yes, internal rate of return, IRR. Yes.
Again, look it up. We went over what that is countless times on this podcast. Look it up, okay? Real simple. Now, Cliff, do you think, man, this cryptocurrency play by the Trump administration, will this move force the Fed to lower their interest rates?
Nah, I don't think this is what the Fed. I don't think the Fed really knows about Bitcoin like that. I don't think he understands it. I think he's feeling a little bit of pressure. It's hard. I mean, I make projections. I think he's slow. So I think this year you can pretty much bet on 0.5 percentage point.
Okay,
that's what I think you'll get this year. Half.
Okay.
They may do a quarter and a quarter, something like that. When they may just do a half and then pause. Something like that, just to break up how it is, because it's at a right now it's at a restrictive level, and it doesn't need to be restrictive. It just needs to be at a level that makes sense, and a half a percentage point is not a big difference. It's enough to loosen up the markets and be able to provide more liquidity without it being so restrictive.
Yep. I agree with Cliff on that one. I think that the Fed is Powell's more worried about tariffs, trash, than anything else, man. This guy, man, he's too political. I think the economy is right now healthy enough for him to cut 2 or 3 times. To be honest with you, this guy, man, Trey. He need to get fired. Like now, he needs to go. Like you said, Cliff, you and I can do his job.
Yeah. Well, you got to understand. Let me even try to find. I believe the Fed has like 50 PhDs.
Yeah.
Man, you make me a president with 50 PhDs, I'm gonna make some decent decisions.
Man.
Like imagine that, Dale. You got 50 PhDs. You can ask.
Man.
Hey, go into board meetings and jump some ideas off. You think you'd be pretty good?
Yeah, very good, man.
Right.
Trash, man. These guys, man, is a joke.
So let me get it straight. You walked in with all them smart people, analyzing the data up and down, and you said, we're gonna do nothing.
Trash, horse manure, garbage. This guy, man, he's a train wreck, man. He needs to go. This guy is a train wreck. He is being political. He was up in front of the Senate and the House this week and just up there stuttering. Up there stuttering. And people are like, yo, man, you're costing Americans $400 billion a year because you're being so partisan right now. He had no answers to any questions at all. It was all, well, I believe tariffs and then tariffs. Like, your job is not to analyze tariffs. Your job is to be a fiscal hawk, not to pretend or project that I believe the tariffs are going to drive things up. We don't pay for you to make what you believe. Our whole thing is to analyze the damn data.
Right. So this exactly, because before you said we don't see the cost of goods going up and inflation going up, and that literally was going up month over month for like 6-7 months.
Correct.
Before he did anything.
That's right.
And so let me get this straight: when the actual market is going, when the actual inflation rate is going up, when it's month over month, it's changing. You do nothing. And now, when the market is staying flat, you also do nothing.
They garbage, man.
It don't make. It's not consistent.
They garbage, man. He garbage, man. Again, respectfully, it's just, man. I just can't. It doesn't make sense to me at all, man. It don't make no sense. It don't at all. It don't, man. But it is what it is, man. Cliff, man, real fast, man. Before we get off, man, because it's been almost an hour, man. Hey, there's been some reports, man, talking about housing warning, deflationary stuff ahead, and the basis off of Zillow information, Doc. Man, as an appraiser, man, what are you seeing?
Yeah, it's like what I was saying earlier. The market right now it's soft, right? So when you look at the overall market, so you have the problem is when you look at that, they look at averages. Yep. And the problem with the averages is they throw in mansions in there that can have a completely different kind of market than what you're going to see for average. So you kind of have to take out the outliers to really get a sense of what's happening.
Yeah.
So what I see for the average market, it's dropping. I mean, I think there's a opportunity here, this is what I'll say. If the Fed did cut and they cut strong, I'm talking about, let's say 1%, right? So you go from a mortgage of 6.7 right now to about 5.7, right? If they did that, even a little bit more, I think that you're going to see the entire real estate market start to come back online by at least 25%, 30%. But here's the best part. When they drop, there's going to be an opportunity to hit that holy grail opportunity where prices are low and they're deflationary right when the rates drop. So prices are low, rates low.
Then you strike.
And then I think that's next year.
Yeah, I agree.
I think it's next year.
I agree. I know that my family, I mean, Clip could talk offline. We are preparing for that right now. I'm preparing for that right now from an investment standpoint. I'm literally preparing for that right now at a large scale. Number two, I'm also preparing for that for me personally as well. So me and Cliff, we're going through this. Cliff, I actually have somebody that may give 3%. Now you do 3% down, man. Conventional. And I don't know. They may use P&L. I don't know.
Oh, okay.
I don't know.
3% down on P&L.
Yeah, conventional. 3 to 5%. Yeah.
Wow. Yeah,
maybe.
I ain't seen that.
Maybe I may be off, but I see that coming just to get the self-employed people off the sidelines, because a lot of them actually have the cash.
Right. Yeah.
They got the cash, so like make it more enticing. We can't get you FHA, but we can give you conventional. I don't know. I put down 3% down. Would you?
Yeah, I mean they had it at one point in time. I mean, I talked to a mortgage broker who told me they had an FHA product that was a P&L FHA.
What? When?
It was going on for the past couple of years. That's what I was looking at. They ended it. But for a couple of years, they had a FHA P&L, where as long as you submitted your P&L with a CPA, right, you got to make sure someone's licensed and reviewing it. Yeah. But if you send it in with a P&L with that, that's all you needed.
Wow.
Yep, a P&L FHA loan. But they ended it.
When was this, man?
He told me, because I actually found two people who are doing it, and they've been doing it for the past couple years. I think it was like 2 or 3 years, but it ended earlier this year around April, maybe, I think. Something like that. They ended it. Because if that was true, you could go get something right now. P&L, shoot, I could P&L's cool.
Oh, me too, man. We killing the game. I would not be surprised if they bring that back.
I'm amazed they ended. I'm like, what was the cause? If it's been going for years, what causes just to end all of a sudden? It didn't make a lot of sense to me.
I just saw something now. It says, does anyone know what broker channel is offering this FHA 3.5 down with only P&L loss statements, no tax returns, no W-2 required? I saw that Virtual Lending is offering it, but I'm not sure if it's a portfolio product or what the broker said. I don't know. I don't know. I'll look it up. I would not be surprised if they get very aggressive. If they get very aggressive on loan products. If I were them, I would do that all day long. There's a lender called, it's an AI-powered mortgage company. Virtual Lending? What the hell is this? And they offer P&Ls. Max LTV.
Yeah, what's the LTV? Yeah, it's probably 75% or 80%, maybe 90.
85%.
Yeah.
It's not. Yes.
No, they had a 3% down FHA P&L loan.
Wow, that right there would be strong.
Yeah, the dude said he was killing it, because he found how to package it and be able to actually present it to get approved, and so he had it down. And I talked to him, and he was like, "I got you. I know exactly how to package it to get you approved."
Wow. And I believe, guys, that loan officers may become obsolete, Doc, because they got AI lenders now.
Do they? Really?
Cliff, look at this, bro. I'm sending it to you via what do you call it? Come on here, Zoho, real fast, man, bro. Our system, man. Yes, bro. They have a AI powered loan officers now. Yes, they got it. Here it is on your off time, man. They got it, man. It's right there, bro. They got it. And I'm on the site now. It is one platform, every mortgage.
Wow. Yeah, man. I've been seeing. Matter of fact, I called somebody, and I swear it was an AI. It was very good, very good. Oh yeah. It took me a second. It took me a little bit of a minute to figure out, like, is this AI? I think the fact though that I'm thinking that it's not obvious, that I'm like, the conversation was smooth. That's the biggest thing I see coming with AI. I know we kind of go into more business. We don't talk real estate over here. We talk business.
Yeah.
We talk a little bit of everything.
We
and
do.
We're gonna talk. And with AI right now, it's I think it's coming where there's going to probably be anything over the phone, customer service related, is going to eventually go AI. The conversation, it's guaranteed in the next 24 months. I'll say that. It's guaranteed. And you're probably going to call and it'll answer all your questions.
Yeah. Yeah. And Cliff, I would say, I would also say, man, you're correct that the P&L is 90%. Now, if I am a seller of a property, the property has been on the market for a long period of time, listen to me. Creativity is your friend. If someone actually been qualified for a P&L loan and they're ready to buy your house, hey, it's simple. Structure it this way. Write it down. I would have them buy it at agreed price point, right? And take the 90% and give them a 10% second, and have it a interest only for 12 months, 24 months, or do a seller second and you charge them an interest rate, something like that.
Getting creative, yeah.
Getting creative. Go ahead,
Dale. Look at, they have a program on the one you just sent me.
Yeah.
Go to loan products.
Loan products. Okay, I'm here. Yeah.
Now, do you see 3.5%
business
down?
On?
Yep.
That?
Dale, look at that.
What the hell?
There it is. It says it right there. This is it. It's a P&L.
Perfect self-performance. Are you sure this is P&L? P&L. Yep. Self. Oh, whoa. Whoa, Cliff. How we calculate P&Ls?
Yeah, look, see, it's a FHA. It says FHA. This is an FHA product.
So they do have it. Whoa.
But they're doing 3 years P&L. That's how they're adding that. They're calling. They want to see 3 years P&L. Cool. Okay. All right. Cool.
Yeah, you can make some adjustments there if you need to. It's not a problem there at all. That's easy to do. Yeah. Again, guys, this is what we do all day long, guys. It says what's the best views or whatever. Okay, good. Yes, sir. That's what we do all day long. So, but Cliff, they have a product, bro. They got a product, man. They got a product. Don't be surprised, guys, how loan products are going to get more aggressive to force you to come off the sidelines. This is for homestead of retail, right? They're going to become more aggressive, and also investors. It's going to become more aggressive when it comes also to those mortgage products for investment property. I'm seeing it already, right now. I'm seeing it already. But yeah, Cliff. Hey, Cliff, have you been able to look at that apartment complex I sent over to you?
Oh no, not yet. I've been dealing with that other thing.
That's all good. Don't worry about
it. We here now. Let me take a minute.
So, guys, right now we are underwriting a apartment complex right now on this online. Underwriting, make sure it's a good deal.
So, wow. And let's walk them through it. Let's do it right now. We're gonna go extend it.
Okay, you're gonna extend it, y'all. All right, we're gonna extend it, guys. Here we go. We're underwriting an apartment complex.
Just real quick, we just doing a quick analysis, down and dirty. Let me see. I'm gonna go ahead. I'm going to.
Now, be careful with sharing any of the information as far as when it comes to.
You're right.
To the address, none of that stuff. Yeah.
That's true. Okay, let's keep it confidential. So basically, I'm looking at an apartment complex. It looks like it's how many units? How many units is this? I'm not sure yet, right? So we're taking a look. I see pictures inside. From what I see so far, it's been renovated probably in the last 10 years or so.
Yeah.
But it has moderate issues. Probably windows are a little old. Usually in apartment complexes, they don't replace windows. They tend to just fix them. So you're gonna see some issues there, because most windows, it's gonna cost you, even on the low end, probably now $250 to replace a window. And if it's more it's a more difficult window. You can go up to about $500-$600 per window. When you got an
Yep.
apartment complex, that's going to add up.
Correct.
Let's see, because they got a lot of boarded up windows here.
Yeah, now, and then I got to get it full context. Some of these units need to be renovated. Some do.
Yeah, they say current occupancy is 25%. You know I like those deals. You know I like them low occupancy. I love them low occupancy. That's good. I like that. Let's see. So they got low occupancy. That's real good. Let's see. Where's this at? Where is this located? Oh, Detroit. That's why. So you're gonna have high cap rate. High cap rate. I mean, last time I looked. I mean, I looked at Cleveland, and they had. I just called a couple of brokers. They were telling me it wouldn't be crazy to see like 10, 12% cap.
Whoa! What? Damn!
Because you are in one of the most crime-ridden areas in the city and in the country. So the cap rate has got to be high, but it does mean high cash flow.
Yes, it does.
Let's see, direct capitalization. Okay. So I'm looking at the cap rate, which is the capitalization rate of the property, basically showing what the income could be for the property.
Sure.
Okay. Oh, they still at a discount. Good discount. Price per unit looks good. And here's another point too. When you're looking at brokers are going to give you a pitch deck for the property. Don't believe it.
Do not. It's called a performer for a reason.
The performer is always perfect, like as if there's no problems.
Yeah, it's like I mean, it's off the chain, but it's performing well. But it's 25% occupied, but it's off the chain though. What the?
Right. Wait, what is it? They said development patterns, the market area. Okay, so they're saying it's going to develop. All right, let's see. All right, here we go. We got some numbers here. The income. Let's see. Comparative graph.
Yep.
I mean, let's just look at if it's 25% occupied. What do you think the rent rate is? I don't see it. I need rent rolls. Where's the rent rolls?
Yeah,
here we go.
There it is. But it doesn't break it down though. It didn't break it down though. Yeah, we need some more information on this. It didn't break it down like I need to break it down.
Yeah, it has comps, which is I'm not really looking at comps because let me tell you a little bit something about commercial as well. The comps are nice. They basically just add a little bit more confirmation, but it probably counts for. I'm gonna just throw out a rough number: 20% of the value. Yep. When the capitalization rate is gonna basically be most of the value.
Yep, that's correct. He's right. He's right, guys. He's right.
Let's see. See, man. Let's see. That's actually seems low. What? The property insurance is only $900 or $800 a month on a multifamily. That
look where it's located at though. It's located though. Look where it's located at though. You know that. Well, that. But if I'm what's called, I want to hire one. That's good. That's a good question.
Yes, they're saying $62,000 per year is the operating expenses. Okay. All right, let's see. Okay, we have the total cost purchase, tax, insurance, renovations. This is cool. They're not showing revenue. Okay, here we go. We're finally getting the rents. They don't how many. Do you know how many units?
As far as been didn't put up the fast.
We're doing this for y'all right now. We're evaluating a multifamily for, I think, close to $1 million property.
Yep. All right. They're right here on the spot, brother. Yep. If I'm looking it up now, Cliff, give me a sec here, brother. I got you.
All right. Let's see if they see renovations. Let's see their renovation budget. I look at line one, Dale. Line one. I go to the renovation budget. Demo, $6K.
Now, this $6K per unit?
No, this is the total that they have. Yeah, it's like it can't be $6K if you're doing that. If it's, I'm guessing if it's 25% occupied, that depending on the amount of units, there's going to be a decent amount of demos. 6K don't.
Nah, let that
$1,000 for a dumpster. That's what they put for cost. That's going to be more than we would do on a house. Because a dumpster's at least $600 for just a basic dumpster.
Mm-hmm.
So you're going to need more than one. You're probably going to need 4, maybe 5.
Yeah.
That's 3 racks right there. Man, these numbers are wait, framing 5K? No. I depending, right? They may not need a lot of framing depending on what they have to do. How do they have doors at 700?
I wish I knew, brother.
Yeah, it don't add up. So right, so this is what I'm saying. When I'm looking at, let's see, do they have the property address on here? They don't have the address, but I'll say this: they're estimating $195,000 roughly for the total cost of renovations. Now, when you're looking at a multifamily property, remember, anything you do, you have to do to multiple units. So the things that stand out to me in terms of pricing is, number one, dumpster. And they're including cleanup in this. If you're doing, let's just assume it's 25% occupied. Let's say it's 75% unoccupied.
Yep.
Based on the pictures I see, let's call it a clean out. We don't know. Yep. We're kind of using rules of thumb here.
Yep.
I don't know. Did you find how many units?
Looking at it right now, my bad.
It probably was, from what I saw the pictures. Let's see, 1, 2, 3, 4, 5, 6.
I believe 16, it is
32. There's like a 32 unit. Seems like
units. Let me see. Come on. There we go. It is. What do you go all the way down there for, man? Units. This is.
I'm saying 11 unit with subject was only 25% occupied with 11 requiring lease up.
16 units. 16.
So okay, and they're saying 11 units require
renovation.
So again, even on those, depending on the amount of work that needs to be done.
Class C.
I mean, it depends, right? Because I'm looking at this property, and these ones mostly seem like cleanup. But the problem is, it doesn't add up together. So, for example, he's saying that it's 11 units, and then the pictures that he's providing are cleanups. Like, basically, cleanup is like paint, carpet, maybe a new toilet seat. Finish the bathroom. Basically, you're just kind of making it nice and livable, right?
Sure.
Getting rid of any of the issues, so you do all that kind of stuff. The problem is, if you're doing that with 11 units, and that's all it is from the pictures, why did they have $32,000 for electrical?
Yeah,
you shouldn't have to rewire anything unless that's if you. But okay, here's another point: if you're going to rewire a building or rewire multiple units, that almost automatically means drywall work, paint, carpentry.
Correct.
So you can't have $32,000 of electrical, but then only have sheetrock work of $5,000.
I wonder because I don't see this. I don't see the copy of the scope of work in this. I don't see it.
Yeah, the miscellaneous is way.
Yeah, we're gonna have to unpack this a little bit more.
That's what doesn't make sense to me. You can't have. Let's see. Look at this one. 5,000 something. Oh, by the way, Dale, I'm gonna let you know. We were having this conversation. We open. I do have access. I can get access to multifamily comparables.
You can. Just Texas or what?
No, nationwide.
Really?
I can.
And that is whether it be new construction, apartment complexes, office buildings, anything.
Yeah. So I basically have a lot of the data because most of all this comparables and appraisal value is data, right? Mm-hmm. So I have access to the data. Not because it's multifamily, so it's not just the building what it's sold for, but you're also getting rent rates, rent per unit, rent per square foot, renovated, not renovated, all that.
So that's what's going on. Okay, I see what's going on. Okay, man, congrats on that, man. That's great news there, man. Yes, it's a 16 unit. Yeah. Now I see why. I see 11. Let's see. 11.
Okay, so this is a 10 unit dwelling as a comparable, and it's sold for $675. So they're getting let's just make it simple. So you want to make it simple. You want to do rules of thumb. So they're getting $67.5 a unit, right? So you're getting, and that's fixed up, right? This one's, renovated, all that kind of stuff. I think so. So is it, new GFCI, LS kitchen countertop. So okay, fixed up 16 unit times what you're getting price per unit. That puts it at $1,080,000.
Yeah.
So that's ARV roughly. So you're looking at $1,080,000. What's purchase price?
You on comp 1?
Yeah. No, I think that was comp 3.
3, gotcha. Okay. All right, comp 3.
Checking out. We're doing this real time with y'all. Checking out $1 Million apartment complex.
Sure is real time, guys. This is what they call underwriting. That's why I said let's underwrite this deal.
Okay, now deal. So they're asking $960.
No, not asking. No, that's the current valuation of the property right now.
Got you. But how did they come to that with the 25% occupancy?
Well, the as is this, because that's not the after per value on this.
Right.
This says it's the as is right now, based on this one's a bigger unit than the comparable ones. The comparable ones are 10 units. Look at them real fast.
Yeah, I saw 11 unit and it's over $675,000.
So 11 units, 675. So the comparable ones are smaller.
Makes sense.
They're smaller. So it has to go like comparable 5 is 10 units. Comparable 4 is, comparable 4 is 48 units, but it is terrible looking. It's terrible looking. It hasn't been renovated at all. The comparable 3 is 8 units.
28.
The comparable 2 is 9 units. Comparable 1 is 12 units. So the unit that we're looking at, guys, is it's not the biggest, but it's the most viable right now because 25% of it has been renovated. You still need to do 75%. So that's what I see.
I see. And they say that because the average, so I'm just looking at baseline price. So I'm looking at different ways to look at data points. You can look at price per square foot. It's not everything. It's a data point. Correct. Same as price per unit, right? And we're going to look at other ones. So I'm looking at this one, which is the average in the area is roughly 48. Price per square foot. This square footage is 9148.
I mean.
That can't be right. That's a site area.
They did a really good job on renovating the existing ones, though. A really good job. I got to give it to them. Just rinse and repeat that.
Yeah, I don't know if the ARV. What are they? They're trying to sell it for 900.
No, that's the as is value.
Right. That's what they're saying. They're not trying to sell it as that. They're trying to sell below. Of course, we get that below. Now, once you renovate the property, that the other 75%, which is 11 units, you're looking at a valuation of 1.2, 1.3. Gotcha. Okay, yeah, because I'm looking at the rents. Rental income was 34,000. What's at the PE? So net income's 28. Though that's based on what 11. 6 units or 5 units.
Oh, 5 units. 5.
So let's see. So you're getting 28,000. So the rent is real low.
Exactly, because of the condition of the property. It has to be low.
It's like 470.
Yeah, correct. Here's saying it's what 4.
I'm saying that's net. That's net value. That's not total rent. Rent could be higher. It could be like 650. I'm saying net. So net basically I'm saying minus any repairs, or minus any operating expenses, and then minus any taxes. Almost like the NOI, net operating income.
Yep. Man,
so we're looking at 28. So you're looking at 466 per. So if you were to apply that to your other property, it was 16 times 12, roughly tripling the value, right? So we're looking at a cap rate. What do you think the cap rate is? We'll put high. We're gonna do 10%.
Yep.
Man, it's low.
What you got?
Man, I'm guessing the cap rate's got to be lower. But if I'm just throwing it out there, so it's 28,450 based off 5 units, right? So that's 5,690 a unit.
Yep.
Times 15 or times 16 units. That's 91,000.
Yep.
And then the cap rate, let's say it's 7. It could be 7.
Okay. 7's cool. 7's cool.
My bad. 91,000. 1.3.
Told you.
Out of 7 cap.
7 cap, 1.3 after you increase the value of it. I mean, increase the value by the value add of renovations, and you got them 100% occupied out. 1.3.
Yeah, so that puts you at 0.7 at 910, about 900,000. Minus repairs. I mean, let's just throw out. They're saying 192. We already know it's gonna be more than that. Let's say 250.
Yeah.
So 650,000. So you wanted less than even that to give you a little bit of a buffer. Let's just say $100,000 buffer. You're gonna want it at 550.
Actually, I'm actually gonna get it probably lower than that.
Shoot, that's what I'm not gonna argue with you.
Lower than that. Knowing that how much you saying that we should invest per unit to get it up to par.
But see, that's the problem. Is it doesn't make the pictures don't show me.
Yeah.
Because it might have made sense, except they said 32,000 electric, which makes me go, wait a second, that's a rewire.
Yeah. And so I like to estimate high. Right. And I say about 5,000 a unit because these are not big units. They're not huge.
It depends. 5,000 a unit. If it's already wired, because the problem is if you have to drop the wires to each one, because you could easily spend. It depends. It depends because it could go up to 7, depending on the amount of rewire. If you lay carpet, and then how much you have to do to the bathroom, like what's the real condition? Because the bathroom could be a cleanup for $1,500, or you might have to redo it for $4.
Correct.
So this is why you need further analysis. All y'all who watching, you need to get further analysis to really figure out what's going on.
Yep, it does.
But baseline, 1.3, and you got to be below 550. You're probably good with them.
Again, guys, we're underwriting a $1.3 million asset live on the live stream. Who else is doing this? And this is a live investor and a live appraiser doing this. Who is doing this type of content for you? Nobody. But your partners.
Man, holla at us, man. But it's late. It's a Friday, man. We gotta go ahead and
we gotta go, man. I gotta take my wife on a date, man. Anyways, but guys, man, Cliff, you want to say anything, man, before we get up here, dog?
Man, this is a big, long week, but one deal away. Maybe a deal like this. Maybe you pick up a 16 plex for $400K. You put $200K in, and it's worth 1.3. One deal.
One day away, guys. One day away, guys. You know how you know I still look better than Cliff. You see the color coordination.
Don't listen to that, man.
You see that.
Y'all smarter than that. Y'all smarter than that.
Cliff, before we get off, man. Cooper Flag, superstar or not?
Man, look at them. Look at this right here. You know I got season tickets, baby.
So hold on. You didn't give them back because you was talking about giving back after Luca.
All right, but it's a little bit of back and forth, but I got the tickets. I got the tickets. So Luca hurt. Yeah. Everybody know after you Mavs fan, you know that hurt.
Yeah.
But you don't just trade Luca, man. Hey, they still trying to get rid of Nico.
I know they are. The fans can hate that dude. Hate that dude, man. They got to win a title to keep him down.
Yeah, but I mean, hey, this all I know is, man, we got something for a long time. We just signed Kyrie 3 years.
Sure did. And Gafford.
Yep. And we got Gafford. And that means by the time they're done, they'll probably still sign an extension because he'll be 37. So he might sign a 1-2 year extension on that. But Coop is going to be 23 by that point. And he's going to be, and remember, we got him 5 years because we can get him on a 4-year deal plus a 1-year player option.
Yeah.
He's going to be 23, ready to go. And Gafford's only going to be 29 at that point.
Yeah. Now, who's better, Luka or Flag?
Okay, it's early, but damn, Luka, it's hard to beat Luka. I mean, he a top 3 player in the NBA.
Yeah. Okay, let's fast forward. Luka's what, 25 now?
Yeah.
How old is Cooper Flag?
He 18.
18. So let's fast forward. Cooper Flag at 25, Luka at 25. Who's better?
It's hard to, man. It's hard to say because the game is so different. Luka's a point guard. He a point. You know, I'll say this. Defensively, Cooper Flag all day.
Oh, yeah.
I mean, 6'9", 37-inch vertical, I think. 7'4" arm length, right? So he got range.
Mm-hmm.
You know, so defensively, it's Coop all day. Luka ain't got none. But the problem is, I think Cooper is an all-around probably better player.
Sure. Yeah, I agree with that.
Because he can play defense, he can shoot, dribble. He got an all-around game.
I agree.
Luka is more like, as a point guard, probably one of the best in the league. He could throw amazing passes. And as a scorer, a pure scorer, top in the league.
Yeah.
I don't know if Coop is going to be a top scorer in the league. I think he's going to be Jason Tatum. Maybe a poor man's Jason Tatum.
I've seen Cooper Flag play, guys, in high school and in college.
Oh, okay.
He is a monster.
Is he really? Okay.
Cliff, he is Luka Doncic with defense and a better handle.
Nah.
Cliff.
Nah. I can't. Cliff. That's you saying a lot. You putting a lot on it.
Cliff.
Yeah.
The dude went up to Duke, man, and dominated.
He did, man. I saw him throw up 40. I saw that. I think it was close to 40.
Here's what sold me on him. You know, when the redeemed team of the last Olympic team went to London and won that thing.
Right.
They brought in Cliff, college players. One of them was Cooper Flag, and Cooper was coming out of high school.
Yeah, he was 17.
Anthony Davis, LeBron James, all of us like, this dude is for real. He was giving AD the business.
I saw him do a step back 3 over AD, a 7-footer.
Bruh, this is what I mean. He is Luka, more athletic, a lot longer, a lot faster, and more defensive. Luka, because experience, is a little bit smarter than he is because of experience. But at 25, I will take Cooper over Luka any day.
Ooh, you putting heat on that? Okay,
Clip.
Man, that's saying a lot. That's a lot. Ooh,
when you got some downtime, just look up Cooper Flag highlights. Not highlights, just watch him play. Dude came on the scene, Doc. I mean, I would say the most hyped person that came out of Duke was Zion. Zion was it.
Yeah.
He was it. Second, Cooper.
Yeah, I say that. I can say
I
that.
mean, he came in and I said, okay, I'm going to see how this dude play. His first game was against Kentucky. 28.
Oh, for real. I'm going to have to watch
28.
That. Okay.
Allowed 28. And he talking shit. He said, I'm coming for your ass. I mean, he and Luka have the same mentality as far as when it comes to Luka's a dog.
Yeah.
He's a dog. Yeah. But Cooper's a dog with hops and can move and can wiggle you. He can, please look him up. Dude, got swagger, man.
They hyping him. They say like they've been talking about Coop since high school.
Bruh.
They when he was 14, 15, they're like, 8, we got another one.
Hold on.
We got another one coming.
Club, before you get off, man.
I'm gonna go get you another hat. You want a hat?
Hey, I want a hat.
You talking like you want a hat.
Hold on. Before you get off, man, give me give me 2 minutes. 2 minutes, and I want you to see with your own eyes. This dude, man, Cliff, he nasty, bro. We're
gonna do this. We're gonna do this off. We've been running a long time. We still on it.
Okay. Now, if you gotta go, you gotta go.
No. I'm saying let's end it. We talking business.
Okay.
We switching over to sports.
Okay.
Hey, everybody, we're gonna end this. We're gonna hop off. We're gonna keep it going.
Here we go, guys. Here's Cooper.
Okay.
Here's Cooper. I'm just gonna let it play, Cliff.
College basketball player of the year is Duke's Cooper Flag.
He's the most advanced freshman in every facet of the game.
He ranks first in all the main stat categories.
He's the best player in the country.
Hey,
player of the year.
Safe to say I'm the biggest, the largest. Been stepping up since my mama stayed in them apartments. Regardless, my daddy told me keep the heat even when I'm in Florence. I'm heartless, cause these niggas is hating on me just because I'm the biggest, the largest, the biggest, the largest. 30K on my riches for hard times. These niggas niggas, they my own contract came back for the 4-5. If you playing, you lay right there by your own kind. Pull up a 4 with the logo, tell them when it's back like so-so. Got this rap here in the choke. Shout out to Bobo. Moved out the trenches, now look how we live. Tell my BM to furnish the crib. Walk out the mall with some shoes for the kids. Deposit the checks from my banks for Liam. Pay them my rent, now I'm up for the year. The view look crazy from here. When I pay for some dollars to buy me veneers, take some piece on my neck, could have bought like a say I'm the biggest, the largest. Been stepping up since my mama stayed in them apartments. Regardless, my daddy told me keep the heat even when I'm in foreigns. I'm heartless, cause these niggas is hating on me just because I'm the biggest, the largest, the biggest. I ain't the largest. The Cali boy weeding the blunt. Let my little brother roll him a Dutch. My little boy do whatever he wants. Man, he don't be asking for much. Wanna lean on the nuts for once. Put a rip for that track in the punch. Let the rich on some extra stunt. White rich, I just did it again. The label, you know how we coming. Tell them they ain't taking nothing. And no business, we shooting the
In the game, bro. It's the game.
Got out the tank, finna go on the 7. Album done, finna drop me another. Couple ends, finna run up another one. Super Bowl rich, I had to go do. Safe to say I'm the biggest, the largest. Stepping up, this is my mama staying in the apartment.
Get that out of there!
My daddy told me keep the heat even when I'm in foreigns. I'm heartless, cause these niggas is hating on me just because I'm the biggest, the largest, the biggest, the largest. Hey.
Hold up. Look at him. Going left. Cliff. Cliff. What do you think so far?
Man, I'm glad we got him. Yeah.
Hey.
And he's gonna go with three all-timers. Everybody knows Kyrie, everybody knows AD, and they sleeping on Clay.
Oh yeah.
Clay got multiple championships too. One of the greatest shooters of all time. Think how good you're gonna be. You can learn. You can learn how to dribble from Kyrie, how to shoot from Clay, and how to get and how to go inside with AD. He gonna learn all of that.
Yes, he is.
Woo.
Cliff.
He gonna be a monster.
You get this dude 2 or 3 years under AD and Kyrie and J Kidd.
Yeah.
Hey, but hey, that's it, y'all. You know how we end it before you leave. Why you can you see that thing, baby? I look better than Cliff. Say, take the picture for your mama.
I try to slick that bug in. I see it. All right, bro.
God bless you guys, man. All right, y'all. See you next time.
Good weekend.
Peace.
Walk me through everything, but let's start from the beginning. How'd you get into this space?
Well, when I was 17 years old, my Uncle Gary, who still lives to this day, introduced me to a concept called passive income.
Okay.
And I said, oh, Uncle, what's that?
Yeah.
He said, something that you do one time, but you get paid over and over again. I'm like, why am I trying to go to college? I want to know how to do that. Gotcha. And so while I was in college, I began to look at business models that generated passive or residual income. One of them was real estate, because everybody and their mama actually had it, from Robert Kraft, Jerry Jones, all the billionaires actually had real estate in their portfolio. So I began buying real estate while I was in college. The first deal that I did, I made $3,500. And in college, that's a big time. In college, you broke.
For sure.
College.
For sure.
So then I went from $3,500 to $10,000 to $26,000, and now $35 million worth of real estate. For me, business is always about solving someone's problem. Whenever you're buying a real estate transaction, the one thing I look at is, what's the pain point? Why you want to sell for? And typically, I like buying properties below wholesale. I never buy properties at retail. That didn't make sense to me at all because I'm planning for the worst case scenario. Each and every deal that I actually acquire, I actually take home cash when I actually acquire it. Wow. Every single time.
If you wanted to know how successful real estate investors make money with their acquire real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace.